Today, we are diving into one of the most watched earnings reports on the entire planet, NVIDIA's Q2. The numbers are just staggering, but the story behind them is even bigger. Let's break it all down. NVIDIA CEO Jensen Huang really didn't mince words. He's not just framing this as some successful quarter for a chip company. No, he's framing it as the very beginning of an entirely new economic era. And as we're about to see, NVIDIA has placed itself right at the epicenter of this whole revolution. So to really understand NVIDIA's financials, you first have to get a handle on the massive technological shift that's fueling them. We are moving way beyond simple chatbots now into something far, far more powerful. The key concept here is called agentic AI. As Jensen Huang explained it, older AIs were kind of one-shot deals. You ask a question, you get an answer, that's it. But agentic AI, it's a whole different beast. It thinks, it researches, it actually makes plans, and it uses tools. This whole long thinking process is a total game changer for what AI can do. But, and this is the crucial part, it requires 100, maybe even 1,000 times more computation. And this is exactly the kind of demand NVIDIA is built to meet. Okay, so with that tech backdrop in mind, let's get to the numbers. This is the financial result of being the primary arms dealer in this new industrial revolution. The headline number is just, wow. A massive $46.7 billion in revenue for a single quarter, a figure that absolutely blew past every expectation out there. And the source of that revenue is even more telling. A staggering $41.1 billion of it comes directly from their data center segment, the hardware that's powering this entire AI revolution. And the growth isn't stopping, not even close. Management is guiding for $54 billion next quarter, which signals that this incredible demand isn't just continuing, it's actually accelerating. And just to put the scale of this ramp up into perspective, that's a 56% increase in revenue from the exact same quarter just 1 year ago. The growth isn't just strong, it is absolutely explosive. So this brings us to the crucial point for any investor, right? Why NVIDIA? Why are they the ones capturing so much of this value? Well, the answer is they sell so much more than just a powerful chip. They sell an entire platform. Jensen Huang actually broke down their networking strategy into 3 tiers. First, they scale up with something called NVLink, which basically turns 72 individual GPUs into one giant virtual computer. Then they scale out, connecting all of those computers together inside a single data center. And now they scale across, connecting entire data centers into what they call AI super factories. It's a full-stack solution from top to bottom. And this is why their advantage is so hard to replicate. It's not just about designing one component. It's about solving what Huang calls the most extreme computer science problem the world's ever seen. They're co-designing the chips, the networking, the systems, and the software all at the same time. It's a deeply integrated approach that simple ASICs or, custom chips just really struggle to compete with. So we've seen the results and the moat that protects them. Now let's look at how all this builds into their long-term vision. Where is this all headed? A key part of their strategy is this relentless annual product cadence. The Hawker generation is now being succeeded by the Blackwell platform, which is ramping at full speed right now. And they're not stopping there. The next generation, Rubin, already has its 6-core chips in fabrication for launch next year. This blistering pace of innovation is how they stay ahead of the competition. And this is the prize they're chasing. Management sees the total market for AI infrastructure growing to a staggering $3 to $4 trillion by the end of the decade. They are building platforms to capture a piece of an entirely new, multi-trillion-dollar market. Of course, no investment thesis is without risk. And for NVIDIA, the biggest variable right now is navigating the complex geopolitical situation with China. On the earnings call, management was very, very clear about the current situation. And for any investor, this is a really critical piece of the puzzle. So here's the bottom line. The H20 is a chip designed specifically for the Chinese market. Right now, because of ongoing licensing reviews and all the geopolitical uncertainty, NVIDIA has included exactly 0 revenue from H20 shipments in its official Q3 guidance. They're playing it safe. However, and this is a really big however, they also quantified what's at stake. If the issues get resolved, they could ship between $2 and $5 billion worth of H2S in Q3 alone. So for investors, this represents a significant potential upside to the current forecast, but it's one that is entirely dependent on geopolitics. Okay, we've covered a lot of ground, from the technology to the financials to the risk. Let's try and distill it all down into the core investment thesis here.
So here's the core thesis. NVIDIA is capitalizing on a historic technological shift to agentic AI. Their dominance comes not from a single chip, but from a full-stack fortress of hardware and software that's incredibly difficult to replicate. They are feeding this demand with a relentless annual innovation cycle, from Blackwell today to Rubin tomorrow, all while targeting a multi-trillion-dollar opportunity. Now, while the China situation is a very real risk, it's also a clearly quantified variable. And that leaves us with the final question. With demand this strong everywhere else in the world, how much does that variable truly matter in the long run?